Hello, everyone. I'm here back with you again. I apologize I was out yesterday, but I'm here to talk a little bit about where we are and where we might be going. Of course, I'll start with my normal disclaimers. Everything I'm going to be discussing here is just my own opinion. It's not financial advice. And yeah, basically, I'm just going to be, talking a little bit about what my bias is and, what I think is potentially happening here. I'll talk about something that other people have already been discussing and also talk a little bit about my own personal ideas and thoughts on things. So, what I'm going to start with is what I ended with on a couple days ago. I did a video on Monday where I was closing with this wedge that was forming, and I had outlined, what could possibly be happening here, but of course we fell through this, and then we kind of consolidated a little bit down here. And actually, on the 2-hour chart, it's pretty clear to see we had clear resistance that had formed in this area. So I'll go ahead and just highlight this for illustrations, that area right there, which is about, I don't know, 81.75 or so, give or take a few dollars. That was a significant amount of resistance as we fell through that. And that did coincide a bit with this wick down here, where we had a wick on October the 13th. Also coincides with a little bit of our consolidation area over here. So that once we fell down there, we saw that there was several 2-hour candles that were showing resistance in that area, and then eventually we had some follow through and roll over, went all the way down to almost 7,900. Currently in this 2-hour candle, which we're only 30 minutes into, we're seeing a little bit of a spring here. I would really like to see us break this previous high, which is at just a little over 8,000. 8,020, 8,025, something like that. Maybe someday we'll be at 80,000, but it's not today. Um, so nonetheless, just as I was outlining on the video that I did earlier this week, I'm still expecting there to be a little bit of and actually let me do this in terms of counts, because that's probably going to be what this is going to be looking like. So from up here, which we expected was the completion of an A, B, C, and I'll go to my BitMEX chart here in just a moment. Yeah, this came in 5 waves, but that doesn't necessarily mean that we're going bullish. If we do happen to break through this low down here, and actually let me go ahead and tag this low, because this is going to be sort of an invalidation for any bull scenario. That level right there, which is at about 77.62 or so, and it just so happens that I'm on the let's see here, I am on, it's not telling me the exchange. Yeah, I'm on the Coinbase chart. Sorry about that. On the Coinbase chart, looking at about 77.6235, and if we do happen to break down below that, that would invalidate several things. Also, let me just go ahead and throw this Fibonacci retracement on here, starting from this low, going all the way up to the high, which again was right there at about 88.26. We've already broken the 618, and actually that's where we saw our reaction, but we were consolidating right below that 618. So let me add one more level on here, which is really going to be our last area of support, which is going to be at the 887. So the 887, and that didn't show up there. That's a negative. Let me make this a positive. 887 on the retrace. That's going to be at 78.8254, which we haven't touched yet. I do believe that we are going to break that. I do believe that we are going to go lower, although I do recognize that it is very possible for us to move higher before we move lower. So what I'm actually expecting to see is, so from here we're looking at this as a 1 and a 2, and then we're looking at a 1, 2, 1, 2, 3, 4, 5. So we're looking at this as a potential 3, moving back up here to our median there for a 4, and then finally moving back down for a 5, and this again taking us down to the 7,500 that I've been talking about for a long time. But now, of course, we're not down here at this level yet to create another bottom, but you can see here we've created, we had a good spring here, we had a mediocre spring here. This was just a, kind of a cup down here on the bottom where it wasn't, we had a long wick here, we had candle body closures way down here for, for a few hours. And then here we spent a lot of time consolidating down here. So I fully expect the next time we do come down here, even though we might have a little bit of a spring, I do expect that we are going to roll over. And this 4 wave likely won't go quite so high. It's probably just going to go about right here. But what we're in the middle of right now is a 5-wave structure more than likely of its own. And you can see here from a lower time frame perspective on this subdivision, we're looking at a 1 and a 2, and then we're going in for the 3, and then we're going to go up for the 4, and then down here for the 5 on a different degree, so on a lower degree. And I'm going to throw a different color on this just for contrast, and then we'll eventually put this onto our on our BitMEX chart. And so let's just take a look and see what this actually is going to end up looking like. So moving this down here. All right, so starting at 8,800, which I talked about, of course, last week. I warned about that for quite a while. So starting up here at the top, going down here to this 1 and coming up to the 2, what are we looking at here? So right now, what we're looking at is potentially a 100% retrace compared to this 1 wave. That is only indicative of a correction. That's not indicative of a 5-wave structure. So when you're looking at the length of this 1 going back to the 2, and then you start to move your way back down, for this to be a 5-wave structure, we want this to go down to 7,500. Based on what I'm seeing here, and I'm actually drawing this out for the first time, so I'm kind of developing this as I go. That would actually indicate that we could potentially be going lower. If we do bounce here again at this level, so let's call it 77.30 or so, that's still indicative of a correction, and we potentially can continue going higher. Again, I would be worried if we do break this low, although it's still keeping this intact here where we had our ABC, but of course, there does lend the idea that there might be something more complex going on here. Of course, if we take out the low of the day today, which is at about 70, let's see here, the low of the day right now is at 79.12, again on Coinbase. If we take out that low, I would expect that we are going to go down here to the 77.50 levels before we do see this bounce up here into this 4, whether it's this 4 or this 4. I do expect us to see a bounce back up here into this level, which is only at about 8,100. So it's not very high. If we do spring from right here where we're at, I do think that we do have high probability going up here to 8,100, maybe all the way up here to 8,225 or so. I do think that there's a spring opportunity here. I'm not so sure that this trend line is going to be so important for the time being, although I do think that there is a decent opportunity to buy down here and to catch a spring to take us back up here. We are in a trading range, and if I take our volume profile on here, it should be pretty obvious for us that our trading range, our high volume area is right there at 81.70 or so. So this is where we have our high volume nodes. We do have a decent amount of resistance that we have here at 83.40. Low volume down here in this level, and if I zoom my way in on the charts, we can see that our volume still is there at 81.67. But as far as our volume nodes go, let me just zoom out here so we can see this a little bit better. And let me just make this look nice, just a little OCD going on here. So I would expect this level to continue to be resistance because it was support here. We fell through and it was a resistance for a significant amount of time, and then we fell over. So if we go back up here, I do expect it to be a wicking resistance, a bearish retest, if you will, in that level before we do finally move down to these levels. I get the question pretty frequently, is this a time for me to sell? Is this a time for me to buy? In my opinion, I think this is a decent area to do a dollar cost average if you are in a good spot position to do a dollar cost average in this level right here. Down here is another potential area that I would be looking to do a dollar cost average. That's at about 77 or 7,800. That last level, which is going to be a pretty important level for dollar cost averaging, is going to be right here, 7,500. And I've talked about this for quite some time. And let me just clear things off here and show you why that level is so important for dollar cost averaging at 7,700. Because if we take a look here, I'm going to take off my volume profile and I'm going to take my Fibonacci retracement and I'm going to start down here at the bottom. I'm going to work my way up here to the top. So at 7,500 to 7,200, these are levels that have been discussed. I've discussed these levels for a long, long time, and I still believe that they are important levels that you should be looking at accumulating. Whether the price is here, and again, one thing that I just noticed that we can go ahead and point out here on the 3-day scale, we've got a little bit of this going on here. And actually, potentially, let me just redraw this because there's a little bit of a channel forming here, which would be interesting to see if this plays out. So I'm going to go ahead and keep an eye on this. So right there, what we can see, and I'm sure if I go to a lower time frame, which I will do here in a moment, this median line is going to be pretty important. So I'll just put that there for the time being. I'll go to a lower time frame to take a look at that. But down here, we're looking at the 618 here at about 72.75, 7,300 to the 6.5, which is a 69.32. For good measure, let's call it 7,000. So for 7,000, which is, it's kind of something that we do want to point out here, this upper wick to this lower wick right here, I really don't want to see it go further beyond the 65. So, it is very likely this is going to be defended fairly well. We had lots of bearish wicks here that were bought up by bulls. So we can take these levels here, which are pretty important, which was our current support also as well. And again, as we pound through these, we're eventually going to break through, and we're going to find this area of liquidity where we're going to likely find some good defense on the support area for us to finally move back up a little bit. Also taking a look at this from a retracement from this top to this bottom, what we did see, we saw a good retest of the 618. We found a break there. We finally moved our way down here to this area, which is our algo target, which we did hit, and we've been consolidating right around this 236. On a 3-day time frame, we've been consolidating there for a little while. And then again, I do expect us to break through and hit the 618 or the 65, where I do fully expect there to be support. Because fact of the matter is, when we retest these, this area right here was the 618 of our much larger structure. This was our 618 of our current structure where we were consolidating after touching that, and now we're down here where we're going to start to test this 618 here. And again, I've been talking for a long time. Our targets, are going to be about 16,400, somewhere thereabouts. We do want to pull up this pitchfork. I'm pulling this pitchfork up because it is to our benefit. There is another pitchfork which we will take a look at, which is going to be to our detriment. So let's just say we go down here, and we'll just call it down to the 65. So that's going to be right there at about 69.32. I'm not saying that's going to happen on Halloween, although Halloween seems like a good day, right? But we'll wait to see how that happens. But we do, again, have a decent probability for us to go back up here and test this. And, this is a 3-day time frame. This is going to take a decent amount of time. We have had so far the second half of the year has been a bear market, whereas the first half of the year we had, we'll call it a bull market, although, we did have a 400% price increase on Bitcoin. We have had a decent pullback so far this second half of the year, or really it's been the third quarter of this year has been bearish. So it would be nice to see 2 quarters of bullishness, 1 quarter of bearish, and then of course, coming here into October, which is the first part of the fourth quarter, it would be nice to see us, consolidate, maybe spring down here, and then to see the last 2 months of the year maybe go up to a double top. We'll still wait to see what happens there. Going back here a bit further, this area here at the 618 is important for this level. I want to point this out because this is also important. What we have here, and I talked about support and resistance levels a lot last week. We've got support here, which is important. We had support here, which eventually kind of fell through, of course, as we know. A lot of that fell through, but nonetheless, this was support here. We've got springs in these areas, which which is important to point out. We had a good spring there. We had a good spring here, but then as far as resistance goes, these resistance levels should turn into support levels. So this resistance here did turn into support once we broke through it. So we have validation on that right here. So as we come back down to this level, again, it is possible for us to do this, work our way down, which will adjust that a little bit. Then we've been looking for a 1, 2, 3, 4, 5 to move our way back up, and then eventually we'll be looking to touch that median line. And of course, we will make some adjustments to this as we go. The farther out this goes, the lower this target is eventually going to be, but still looking for that. Now, I said that this was going to be to our benefit. Let's take a look to our detriment to see what could potentially be occurring here. So again, I'm going to pull out my Fibonacci. I'm going to put on my magnet tool, and I'm going to zoom in on the charts a little bit. I'm going to take our high all the way up there and go all the way down to our low, which is about right here, where we wicked off of this 618 here. So now what does that mean? What is potentially going to be happening here? Just making sure I got that right. 19,891.99. Coinbase didn't quite touch 20,000. And then going all the way down here. So our low, making sure I got that. Let's see here, 31.35, 31.28.89. So it's pretty close, right? So now let's take our pitchfork tool here. And again, we're going to go all the way up to the top. We're going to work our way down here to the bottom, get as close as we can, and then go up here to the top. All right, so interesting points on here. The median line, it's much lower, right? So what we can do, we know that this was a little bit of a corrective structure. We know that this was a bit of an impulse, and now we are in a new corrective structure. So this again is to our detriment. I'm not going to say we're going to go all the way down here, because eventually we get to the point where we are looking at $100 or less and going into negative territory, and that is going to be a bit not realistic, right? I do not believe Bitcoin is going to go to zero, nor will I ever suggest that. But what I will say is, based on this corrective structure, we've got this trend line here, which is actually the 618. And I'll go ahead and color this just a little bit differently. Let's go ahead and color this one orange so it's a little easier to see. We've got the 618. We've also got the 6.5, and let's go ahead and do this because this is a 50% line here. Let's take a look and see what this looks like, because it is quite interesting. So I'm going to go ahead and zoom in here. So we bounced off of the 50% here. We did it again. We did it again. We had a little bit of an impulse, which is where we broke and touched the 618 again on a on a lower time frame, we started to move down. We touched that 50% again. I do believe we're going to come down and touch this again, which this is at 7,100. And 7,100 is the 236 retrace, where we had decent support here and here. We finally had a little support here. We broke through. We consolidated below it. Eventually, we were consolidating consistently below that level, and we broke through and hit our 3127. It is going to be possible for us to break down to this 3,000 level again. Although I do think that it is more likely that we go higher once we touch this 7,000 level versus going lower. I do think that this 50% on this pitchfork is going to eventually hold for one last time down here in this level. Not really sure exactly where it's eventually going to touch as far as a time frame wise goes. I do think it is going to take some time for us to do this. If we look at Bitcoin on a weekly time frame and we put on an important moving average, I've got two moving averages on here, which I do want to pay attention to. And let's just take a look and see the metrics that I've got on these. We have on this exponential moving average, we have a 21 exponential, which is in the yellow, and on our regular moving average, which is our 50 simple moving average, 50 simple moving average right now is at about $6,800. So that's at 67, 60.39, whereas the 21 exponential on the weekly is at about 8,900, which is one of the reasons why the retest that we had just the other day. Let me move to a log. Let's not move to a log scale. That doesn't work out for us unless I remove this Fibonacci, which I can do. No, we're not going to do that. Okay, on a weekly time frame, the 21 exponential, we were attempting to retest that. We didn't quite make it. As far as the weekly goes, we haven't taken out the lows from the last 2 weeks. So that is, that's pretty good. But although, I do continue to take a look here at this 50 simple moving average, which if we take a look, and I'm going to remove this tool here. I'm going to see if I can get this on a log scale because it is, it's not working out for me. So let me see if I can manually make this look a little better on a log scale. All right, so here. So we saw a test of the 50 simple moving average on the weekly back here where we tested 6,000. This was back in February of 2018. We had another test of the 50 simple moving average here, which we had a good bullish test. We haven't tested it one time yet this year, so that's another reason why I'm expecting us to gravitate towards it. You can call it mean reversion if you'd like, and that's what a lot of traders are looking at. And I do have something that I would like to pull up here. So from a mean reversion standpoint, we are, and let me move to a time frame, or at least an exchange that has more data here. So on a weekly time frame, seeing if I can pull up this log scale. What I'm seeing here, and I guess that's not going to look good for my bands, but let me hide my algo, and I've got my Bollinger Bands on there, which are good. Okay, so we are trading inside of this band, which is that's a shortable area, and that's really where we tested. So this would argue that we are potentially going back down here to these lows. Although it is more likely for us to stop here at 67.85. So that's going to be our 20 simple moving average, again, on a weekly time frame. So looking at this, finding us in a bit of consolidation on the top of these bands after trading above them for a while, and you can easily see right here, if I zoom in, we tested the upper band here after we finally broke out of it, and we tested it, and we eventually started trading, and that's where we got our blow off top, and now we were consolidating above this area here, and now we're moving down inside of the band, which is it's slightly bearish. It is a bearish structure that we're currently in. So I would be looking for a move above 8,800, and we're looking for a weekly to close above 8,800 before we are going to really see any bullish reactions here. In my opinion, this was a good distribution up here in these levels. Good distribution was occurring up here. And so now we're waiting to see accumulation. A lot of people are talking about there being Bitcoin wallets that are accumulating heavily. And it's very possible that they are. You know, if you were one that bought down here and then you distributed up here, where we were up at the 13,000, 13,500, naturally you're going to want to accumulate down here in the 8,000 level. You're going to accumulate down here after distributing up here, and you're going to keep more cash on the side to do dollar cost averaging in case we do eventually go all the way down here to this level, which I'm not saying that we are. I do, again, fully expect between 7,000 and 7,500. I probably sound like a broken record. I do expect this level to hold, and I expect that anybody that is accumulating in this area is also going to be accumulating down here. So I fully expect there to be accumulation down here in 72 to 7,500, and then we will eventually see a move up here. Again, one more thing that I'm going to go ahead and pull up here. I'm going to draw this out for you, and then I'm going to close up the video now. So we've got this level here, which is important for us to look at, and then we also have this level here, which is important for us to look at. So maybe we go back up here. I'm not 100% committed for us to trading back up here in 9,200. Although if we do break this trend line, I would see that as extremely bullish, and I would be looking to aggressively long the market, because that would indicate that we are going to go, much, much higher. So from here, you can see that we have, we'll call this, I'm just going to do a 5-wave structure just for illustrative purposes. I'm not saying this is a 5-wave structure. So we've got a 1, we've got a 2, we've got a 3, then we're going to be looking for this 4 here. And then we're going to be looking for a 5 somewhere down here. It will likely happen fast. So this again is going to take us down here to this level. Maybe we're not going to go quite that low. Maybe we will. Well, that'll remain to be seen. And then we're going to be looking for a pattern out of this. So that is more than likely going to be looking like a 1, a 2, and then we're going to be looking for a larger 3, a 4, and then we're going to be looking for that 5 to take us back up to potentially new yearly highs. So just because the price is going down doesn't mean that you should be afraid of the market, doesn't mean that you should be scared. These are opportunities for you to buy. And again, based on the Fibonacci retracement here, again, I just want to pull this up one last time. We're taking a look at this, and it's very important that you take a look in this level right here between the 618 and the 65. These are prime areas for you to be accumulating for long-term or longer-term holdings. So I would be looking to buy down here, maybe buy along the way in case we get a front run of the 618. I'm not sure that I would consider this a front run. It's a little too far. But once we get down here to the 72 to 7,300 level, that's where I would be looking to get into those longs. The 8,000 play that I was discussing a while back, that has come and gone. We've already talked 8,000, 8,800. That's gone. If you are going to buy at about the 8,000 level now, I would say that's going to be a short-term play. So if you're going to buy here in 7,900 to 8,000, you'd be looking to get out of that with a couple $100 profit and get out, because I do expect us moving further down, down to the 618 or the 65. We are going to gravitate down here. I fully expect we're going to gravitate down here, and I'll be continuing to monitor over time and let you guys know how things are going to go. This 4 wave up here is likely not going to hit. It's possible that was our 4th push. So we have our first push down, second push up, third push down, fourth push up, and now we're going to start our 5th push down, which is going to complete this corrective structure before we start to eventually move back up. So again, this is a bullish corrective pattern that we more often than not are going to trade out of here. But again, I would consider buying a little bit here. So take some of your capital and buy down here. And then once we do confirm that we are going to break out of this trend line on the retrace, that is where I would be looking to further open up, more aggressive long positions, be conservative down here, be more aggressive on this retrace because this is likely where we're going to start our third wave, which is going to be our largest wave of the structure. So that's what I got for you right now. Sorry, I spent a little more time talking than I had expected to, but if you have any questions, feel free to pop them in Discord. I can answer any questions that you've got. Otherwise, if you don't have an invite to it, feel free to shoot me a DM and I'll be more than happy to get you an invite to it. So have a good night, everyone. Have a good day wherever you are in the world, and I will catch you all in